Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Scott Bauer. Hey there, Scott.
Jeff, how are you?
I'm doing great. Interesting week. We had a lot of Fed speak. We saw Fed Chairman Powell set the expectations for that rate cut at the end of the month, but we also are on the dawn of earnings season kicking off next week. What are you focused on?
That's really what I'm focused on. We got all the banks next week, and like you just said, that's going to be the start, and that could really make or break what happens over the next couple of months.
And we are seeing some weakness in the European banks. Not going to pick on Deutsche Bank, but nonetheless, that is putting some momentum into the banks here domestically. What are your thoughts into this earnings season? Is it going to be positive for the domestic banks?
I like them a lot. I think they've really weathered the storm in terms of interest rates just getting hammered over the last 9 months. I like the upside.
All right, great stuff. Let's get in this first lightning round. You ready?
All right.
Gold retracement. Well, we did see a brief dip under 1,400, and kudos to you, Scott. When we talked earlier, the last time we saw that run up to 1,450, your trade example was selling that call spread, selling that 1,450, 1,500 call spread. Now, my question to you is, what are we doing with this precious metal here back above 1,400?
Well, you know, I like to trade the ranges that it's been in. So the recent reaction from gold to Fed Chairman Powell this week really allows a trader to potentially capitalize inside of this established range. And I'm looking for more of a move higher from here, and I would like to buy a week 3 1425, 1450 call spread. That's the July 19th expiration. And this spread potentially costs an investor about $480.
That makes a lot of sense as we see a potential back and fill. If you look at that chart, there is some volume needed to go back up to 1450. And remember, the August gold future contract was trading about 1414 when this trade example was priced out. And the at-the-money volatility, Scott, we talk a lot about the at-the-money volatility here on Striking Options. It was trading around 13%.
Exactly. And like you said, I like the backfill opportunity here.
Great stuff, Scott. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round, pal.
All right, let's do it.
Dow Jones momentum. Interesting to see. We're looking at all the indices moving higher, the S&P 500 above 3,000. But here we are in the Dow Jones touching 27,000, making it over 27,000. My question to you is, will it be sustained as we're just about to go into earnings season?
Well, there's a lot of hope for the Fed rate cut, which probably pushed that Dow up here. Earnings season coming up. Maybe it's time to look at, a little bit of a range-bound area.
Well, it's interesting. The trade example I want to utilize today, I would be selling the week 3 27,000, 27,500 E-mini Dow Jones call spread. This will allow an investor to potentially collect $609. It's a very handsome premium, Scott.
It is, because we're trading almost right at the money on there. These options expire on July 19th. And as a reference, the September futures were trading at 26,962, and at the money volatility was 9.6%.
And you may ask, why am I so aggressive on selling this 27,000 strike? It's due to the fact we've seen such a run up in the market. We have a little bit of time on this trade, but I think if we see some uncertainty of that forward guidance from some of these big multinational constituents of the Dow Jones 30 companies, I think you will see a little bit of a pullback, or at least a breather here for a settle underneath 27,000, Scott.
Exactly, and like you said, it's a pretty big, handsome premium on this potential setup.
And it is a risk mitigation in the event you are long some of the names or have equity exposure domestically. So remember that there will be a little bit of a limit here above 27,000, but if the trade does go a little sideways or lower, then you'll collect all that premium.
Exactly.
All right, Scott, well, thanks as always for coming on. I want to thank you for tuning in to Striking Options. Please tune in every week as we will continue to strike options.